There are various price drivers in the grains markets, much similar to what we have heard for the metals markets from a macro perspective. This is something we always have to be conscious of. But I guess what I'm trying to focus on here today is very much the more global supply and demand factors. You have obviously your demographics, etc., increasing population, increasing middle-class population in the BRIC countries. And you have regional differences, arbitrage opportunities between different markets, where grains will be higher in one market versus another market. And it'll be right down to also local factors, which will be unique to each particular area. But as I say, I plan to focus very much on global and regional supply and demand. So maybe as some of you are aware, some of you are not aware, there's three primary grains that we discuss when we're looking at the grains markets. There's soya, corn and wheat. And the reason we focus on these as they're representative of other markets, but they're the primary commodities that are utilized by the feed industry, the feed compounders who are producing the feed that is utilized to feed the pigs, to feed the cattle, to produce beef, etc. And it's always, you know, soya is primarily the source of protein for this feed product, and corn or wheat is the primary source of energy. So the feed compounders are all the time making a decision, which can I get, how can I get the ultimate mix, the best mix, so as that it will put the most meat on my pigs, on my cattle, at the cheapest price. So if a situation is that they are utilizing corn, but wheat becomes a lot cheaper, it mightn't be as efficient in my mix, but it has become so much cheaper relative to corn, then I will look at using wheat. And in the same way, farmers are making a decision as to what they're going to produce. Obviously, if you take the costs are flat as to regards whether they produce wheat, corn or soya, they will look at what is selling at a most expensive price, and, you know, factors, crop rotation, etc. permitting, they will then go for the most expensive crop that they can produce. Makes basic economic sense. So we talk about the battle for acres between the three different components, the corn, the wheat, the soya. And this largely is encapsulated by three or four main areas: North America, Brazil and Argentina, and Europe. Europe primarily for wheat market, the US primarily for soya, corn market, and Brazil and Argentina for the soya and corn market. So breaking down the market drivers you have in the grain markets, it's a little different from the metals markets, where somebody was explaining to me last night, if you have an aluminium plant, you start production, you can't switch it off. And regardless of what the situation is, it's pretty standard throughout the year. That's different in the case of grains. Obviously, you have this old and new crop dynamic. Nobody knows at the beginning of the calendar year what the production is going to be post-harvest with certainty in the grains market. So you have, at the moment, you have a big divergence in the price between the old crop, which we would refer to as the crop harvested last year, and the new crop, which is the crop that's going to be harvested in the Northern Hemisphere come August, September. The price of the old crop is at a premium to the new crop right now, because, as many of you are probably aware, there was a big drought in North America last year. This big drought has caused a shortage of stocks for the main exporter of particularly soya and corn. So that's really probably the nub of the story. The drought in North America has been the main focus, causing the decrease in stocks, while we still see the continued demand from the likes of China, etc. Climate market is obviously, as I referred to, given the drought that we have had in America last year, a big driver of price, and it will be this year also. If we have the equivalent so obviously the climate is a big element and the cost driver. Trade flows dislocation, what I mean by that is that we have had the southern hemisphere harvest for Brazil and Argentina, which has had really good crops, but unfortunately they've had a lot of difficulty in shipping that crop out. Logistics in Brazil have meant that ships are in port for 55 days before they can get loaded, and as a result we're seeing a lot of cancellation of contracts. So if I can re-emphasize the picture, you have a shortage in the main exporter in North America of old crop. You have bumper crops down in Brazil and Argentina, but they can't get it shipped out. So that's a large element of the driver of prices at the moment. Obviously, continuing consumption. You know, I know everybody's probably bored with the whole Chinese story, but it is an element as well, which I have some slides further on that will demonstrate what an effect they have on the market. And going back to the other factors that Paula was discussing this morning, the strength of the US dollar, this obviously has a big effect on commodity prices. Geopolitical risk is another factor that can crop up at any particular stage. We had the Arab Spring there last year. This caused a big effect in everything from the grains markets to the dairy markets, where you had a collapse in demand for the likes of butter, etc., and obviously in the grains markets. We're seeing in Egypt at the moment, who's a large importer of wheat, their currency has devalued quite severely. It's very expensive for them to source wheat from the traditional sources of Europe, etc. So they're looking at lower quality wheat in the likes of India, which has quite an excessive supply of wheat. So just for your benefit again, this slide is very much just showing the different points of the year, which at what time crops come to market. As I was referring to earlier on, southern hemisphere here for South American soya beans, that has been largely harvested. The same for South American soya beans. They would be harvested. Also wheat, but we're still at the area for the US for the likes of soya beans and corn, where it has yet to be planted. On the other hand, we've had large plantings of wheat in the US, and it has come through the winter quite well. So as the year goes through, you're all the time assessing what is the situation with the crops, how are they doing, what's the harvest going to be like. So soya beans. This is basically soya beans between the three main markets. The blue line there will identify the fact that there's a premium being paid for US soya beans over the green and red line, which is the Argentinian and Brazilian price. This has somewhat got to do with the fact that stocks are extremely low of US soybeans, but also given the logistical issues that they're having in Brazil, where contracts are being turned back because basically they can't deliver. So people, even though particularly the likes of China, are going to North America to secure their soya beans, even though it's dearer, they're assured of delivery. So that's why you have a premium at the moment for the US soybean market. This is a supply and demand, world soybean supply and demand. It shows here on the pie chart the actual production. As you can see, 80% of the production of soybeans is United States, Brazil, and Argentina. You can also see up on the extreme right in this table, you can see what stocks, world-ending stocks have been post-harvest. So they've slipped from just under 70 million to 60 million metric tons. Not a huge figure, not a panic button figure, but at the same time quite concerning when you see who actually holds most of that stock. This is a chart that's showing basically soybean, US soybean as the largest exporter of soybean, where their actual use or demand for soybean has outstripped again last year their actual supply. This obviously continues to eat into stocks. You'll also see here where we have moved from last year, where we had, or the year before last, where we had ending stocks of close to 6 million metric tons, where we're down closer to 3 million metric tons. So if we have another year like we have had, then stocks are going to be dangerously low for the largest soybean exporter. So this chart is here showing, that there's still strong demand for soybean. You can still see the demand that's going through the exports that the US is running. I'm just going to skip through a few of the slides just to keep up the pace. So at the moment in the US, if for the purposes of demonstration, if there was to be a big nuclear attack or whatever, and we were never to grow any more soybean in North America, we essentially come when the new crop is supposed to come online, there would only be 16 days of soybean stock left as the largest exporter. So that's just to give you a feel for how severe the situation is as to regards soybean stocks. It's not even a month. So this chart here again is Brazilian soybean supply and demand. As you can see, they've had a bumper production crop. We've gone from 75 and 66 million metric tons up to 83 million metric tons. Ending stocks are obviously seen to remain where they are as to remain at highs. So they've had a bumper crop there, but this is a graphical demonstration. It's basically a satellite picture of the ships at the main exporting port in Brazil. And you can see obviously all the ships waiting off port to try and get in and get loaded to fulfill the contracts. But it's basically a 55-day waiting period at the moment to get in. So this is the tremendous logistical challenge that Brazil faces in getting its crop out. They've also had other issues like strikes in the ports, which obviously doesn't help. So Argentinian soybean production has been well up, as you can see also. Demand for feed has also been quite substantial, and their stocks are quite healthy. So they're in quite a good position to also export. So then this is the main demand for soybean on a global basis. And as you can see, 65% of demand for world soybean is generated by China. Why do they need so much soybean? Well, they're huge pork producers to feed their pigs. They're the #1 pork producer in the world, and the size of their pork herd or pork population means that they have to import so much soya. And that's why we have 65%. Now, you can say that this is going to continue as their appetite for pork increases and the demand for subsequently for soya continues. But it just goes to show there's a recent story there. In the last couple of weeks, you might have heard about 16,000 pigs being found, diseased pigs found in the rivers around Shanghai, that farmers are just dumping the pigs because seemingly there's scare amongst the population now as to regards the pig production and these diseased pigs, and that some of the stories are saying there's a 30% decrease in the consumption of pork. So I take that with a large grain of salt, but at the same time it just goes to show what can affect these markets if suddenly they were to stop consuming pork to such an extent, and subsequently they would drop the demand for soya, then maybe regardless of the weather in the US, it mightn't be such an issue. So this is to give you a view of their stocks. Sure, they have close to 15 million in ending stocks in China, and that has been constantly growing. But they're not going to be exporting that. That's going to be staying. So you know, it's obviously so world soya bean stocks, as you can see, while they looked quite healthy when we were looking at 60 million metric tons, quarter of that is basically in China, and it's not going anyplace. And the rest is obviously Argentina and Brazil, and they can't ship it. So the United States, as you can see, as the largest exporter and just on par with Brazil as regards production, has only 6%. It's tapped out. So you might say that picture produces a decision that, well, soybean is probably all the risk is to the upside here if we have bad weather in the States again this year. And that's true. But when you look at where the price is, we're actually, over a 5-year period, we're in the upper 30% percentile, as you can see here. We're a bit off the highs, but we're still quite high. So, but at the same time, you know, avoiding situations like I referred to with the pig production in China, and if you have a situation whereby the weather is actually particularly dry in the States this year, then I think we're going to see a new paradigm for prices for soya. And I think we'll push well above this 1800 cents per bushel. So corn, I would identify that the story is quite severe for soya. I would say that it's probably worse for corn, and in essence wheat is probably, not to tell you the end of the story, but wheat is probably okay. So this is corn again. As you can see, a premium being paid for US Gulf corn, which is US corn, and how it's shipped out, even though their supplies are quite tight. But the marketing is in rationing demand mode as such, through price, increasing prices. So, as you see in this chart again, the demand on a worldwide basis for corn has outstripped production this year. So, hence, stocks are getting hit. Ending stocks 118 million, 117 million, versus where it was, 30 million higher only 2 years ago. This will show you again who are the biggest corn importers. China is largely self-sufficient. The US is the biggest producer of corn, and also as a result the biggest exporter. So this is to give you a chart again. Obviously it's really healthy from a perspective of what acres being planted. Just the issue is as to regards the stocks. So you can see here in 2008, 2009, stocks in the US were close to 42, 43 million metric tons. We're down to ending stocks at the moment of 16 million. So it's quite low. And this is again showing you that basically in the US, use and demand has outstripped production. And this is just to give you a feel for actually how tight supply is of corn in the US. You can see here going back to 1983, the actual exports, the corn exports, have been quite healthy. But you can see how it's basically been decimated in 2012. They just don't have it. A large element of the discussion is this food versus fuel thing. You know, as regards a lot of corn going into the States into ethanol production, and you know, people will argue both sides of it. One thing I will say about it is that while a large element of wheat goes into of the corn crop goes into ethanol production in the States, it still does generate a third of that back as feed for cattle in the form of DDGs, distiller dry grains. So this is somewhat of a throwback as well to the overall feed component of the industry that's generally not taken account of. So just kick on here to yeah. So basically, U.S. corn imports, as you can see in the past, has been pretty low, but given their tightness of supply, we've seen a huge jump in 2012 again. So Argentina, or Brazilian, sorry, corn stocks, you can see are still quite healthy. Also the case with Argentina, but not game changing. The US is the real story as to regards corn supply. So in corn stocks, you know, ending stocks, China holds just over 50% of corn stocks, but obviously none of that is going to be exported either. So that's a concern. And this is just another chart of corn at 5-year average. As you can see, we're bordering the higher upper 10%. So if we do see a situation, repeating myself I guess, but if we do see a situation again with a drought in North America, then we'll see a new high for corn. So wheat is a much more relaxed situation. It's not half the panic that we have in the corn market. As you can see here, we have worldwide production. Europe actually features quite significantly as to regards prices in wheat, and you can see Rouen there. There's quite a premium for wheat out of Rouen. This is the wheat calendar again, and basically production throughout the various parts of the world. The crop has been planted quite well in the US. It's had a good covering of snow that protects it from the frost. But also the big issue, obviously, as I keep referring to, the drought in North America. Snow, you know, rain makes grain, as the saying goes, and you know, this snow is going to turn into moisture, obviously, and should improve the moisture content in the US and help with the crop subsequently. The same is true probably here in Europe from the perspective of it's been quite a good snow covering, moisture levels are pretty much up, there's been no winter kill, so there should be no necessity to plant spring barley or spring wheat. So this is the global supply and demand situation again. As you can see, much healthier. World carryout is pretty much at levels that it can cope with any you know, like I'm looking here at world carryout in 2007, 2008 versus where we are now. So we've been in much worse situations in the past. Okay, demand has increased and use has increased, but we're not in the situation that we were in 2007, 2008, and we haven't had big winter kills, so we should be okay. Yeah, this chart, I guess, is basically showing really Black Sea. Russia had a terrible year last year as to regards wheat production. They had big drought issues as well. And you can see here, this is wheat exporters, and the blue line as you see Black Sea region has basically has taken a big hit. World wheat importers, it's pretty broken up, as I was referring to. Egypt, obviously a big importer of wheat, but they're looking at cheaper sources of wheat right now. India has had a large crop, but they don't have the infrastructure for harvesting that properly. Basically, the crop is thrown in the field with a tarpaulin over it, and so you have all sorts of decay. But as I say, Egypt is tight for money. It needs to take it where it can get it. So basically, this is just outlining the trade that has been taking place, or the way it moves for wheat, and it's been slow. It hasn't been particularly exciting. The main focus has been on the soya and corn markets. So this is just to give you an idea of the Russian situation again. As you can see, their carry-out has generally run between 10, 12, 13, 14 million metric tons per annum, but they're down to 5.6 right now. That, as I say, is because of the drought. Now that's excluding, they also have an internal stock that they keep of about 5 million metric tons for emergency situations, and the word is that that's down to 300,000 tons. So it will have an effect if they decide to replenish that stock on the overall wheat price this year. And you can see how they're inversely related. You know, if the US isn't exporting, then Europe is exporting, or in this case Russia, but Russia and Europe you can use as an approximation. So basically, as you can see there. So this is just former Soviet Union area. Obviously, Russia is the big element of fall off there in production in 2012, and obviously the ending stocks are down also. You know, the former Soviet Union is seen as the new messiah as to regards wheat production in the world going forward, but it's been patchy. There's been various issues. This is all US wheat production, hard red wheat, soft red wheat, and this is the Chicago contract, this is the Minneapolis contract, and this is the Kansas City contract. So the acreage is probably back that's been planted due to the fact of the high corn and soya prices, and as a result, stocks have taken a bit of a hit, but worldwide stocks are pretty good. We've also had the situation in Canada where the Canadian Wheat Board, which had somewhat of a monopoly situation in Canada, has been broken up, and we're expecting more exports from Canada into America as a result. As you can see, in comparison to the likes of soya, carry out in the US has got 103 days of the supply, so 3 months almost. So it's very healthy. So that's the Canadian situation. How am I doing time-wise? I need to move along. Yeah. So major importers for wheat are obviously North Africa, Middle East, Southeast Asia. Brazil also imports from Argentina largely, and China is quite a big producer of wheat. They consume, they're independent and consume all they produce, so they don't export. So you know, you can have situations like you had with North Africa with the Arab Spring, where there can be a drop in demand, creating an excess of supply. So this is European chart. The French obviously as huge producers, but our stocks have remained, while they're off from their highs, they're still not nearly as critical. Wheat exports for Europe have actually quite substantial to the likes of the States for a change, which is definitely different. Carry out for world wheat is 95 days supply, so quite healthy as well. So, sorry, world wheat ending stocks. India, as I said, has a large stock. The US has large stocks. All pretty healthy. So, in summary, again, I would say weather is the main focus. Soya and corn is where the danger is, and wheat will obviously play off the back of that, unless there's some intrinsic disaster for it as a crop. Weather-wise, you know, I discussed that that's a main factor coming up. moisture levels are still down in the US. You know, the Iowa as a state would be one of the main producers of crops in the US. And, you know, in some places they would claim that there's a 90% deficit on humidity. You can see here the red denoting the actual shortage of moisture. And you can see here February 26th. It's actually probably got worse to March 5th, so, but it's still sort of early days, you know. And then this is just a chart, grey obviously saying everything is pretty much as it should be, as neutral, green denoting the areas where it's actually improving as a situation. And the soya bean crop is planted in Argentina is not expected to be as good for the new year. So the external drivers, one of the factors we were discussing yesterday is the effect of financial speculation on the price of grains. So just the actual black lines here are denoting the actual price here of soya beans, corn, wheat, and just for comparison here, gold. So as you can see, the blue graph then shows how many net longs are in the position, how in the trade, how many are actually holding Chicago futures, long Chicago futures, and potentially tying up supply. So as you can see, there's been a large decrease, which sort of ties into what we were saying yesterday, where people are moving away from commodities, and as Paolo was saying, you know, putting their money into the stock market and equity markets as opposed to commodities. This is the Dow Jones. You've seen that earlier on, upper 10%. Euro the last 5 years, and you know, obviously the dollar index has a large effect as well as to the price of commodities on the grain side. And you've probably seen this chart and loads of times as to basically the mentality behind people trading. And you know, when prices are at high, there's a panic in the market, you know, and subsequently you get the capitulation. Which phase we are right now for grains? I would think, you know, I would think we're going to get a healthy harvest this year, and we're going to come off from the highs. So these are just the last 5 years, the Paris milling wheat, upper 30% percentile as well. So prices are quite high relatively. So potential game changers are, as you're sick of me here saying at this stage, the weather. Any failure of US corn or soya would create a new paradigm of prices. Lesser factors are Russian replenishment of their intervention stock, that 5 million I referred to earlier on. Macroeconomic situation, China. Is Bernanke staying? Isn't he staying? You know, and political unrest can crop up at any particular point. So these are probably all macro factors that you're well aware of for every other market that you're dealing in. So looking into the crystal ball, this is my other job. We would say for wheat, 170 euros to 220 euros is probably the range of where we're going to be, and I would say probably to the lower level of that, closer to 170 euros a metric ton. I think US corn, we will see new high prices in soybean prices if we get, you know, we'll see all-time new highs. So that's where the real risk is. But if we do see those new highs in corn and soybeans, then I will be wrong on the first count as to regards wheat. You'll probably see wheat closer to 250 euros, 260 euros a metric ton. So just skipping on to dairy. The general dairy trade, I wrote this probably about 2 weeks ago, and a lot can change in 2 weeks. Markets have been relatively quiet in Q1. That's been blown out, particularly last night. I don't know, yeah. You might have seen that Class 3 milk shot through the roof yesterday. Two factors that are mainly at play there: the GDT auction, which is the New Zealand auction. They've had a drought in New Zealand, weather-related again, the North Island in particular, where a lot of their production is done. And that has basically cut supply, and as a result GDT prices are up. I actually have a chart further on of that. Kiwis, or New Zealand, are the largest exporter, obviously, They were on target for a 10% increase this year, which was going to match demand, but drought officially declared they're actually going to be flat to 1% increase probably. Still strong demand in China. They have this DCD thing you might have heard about. It's basically the fertilizer, and this is a situation where you can have a real big game change. If China took the view, because a lot of their exports are into China, and there was this chemical that was found in the milk which has got to do with the fertilizer that they were using on the farms, and there was a real fear amongst people who were using Kiwi dairy product that China might just shut up shop and say we're not allowing that to be imported into our country. And if that situation did arise, then you'd have all sorts of chaos in the dairy market. But it's not gone away. This is just this is not the latest GDT auction. That one was yesterday, but it's similar. Basically, this is the one from 2 weeks ago, March 5th, where we had a 10.4% rally in prices. 10.4% across the board. We've had we've had 14% the day before yesterday. So prices are rocketing at the moment in dairy. That's the last GDT auction, same story. This is just giving you an idea of the forward curves for Kiwi product. As you can see, a lot of demand on the front end of the curve. Back end of the curve is a little more relaxed. Yeah, markets merging. Europe has basically now, in the last couple of weeks, taken its lead off the GDT, and butter has gone from 3,300 euros a tonne to closer to 3,400 euros a tonne. Skim milk powder, the same story, and I think it's going to see that continuing through the rest of the year. And I'll skip on again. This is just a forward curve. Skim milk powder, you can see here 27.50 is sort of trading out the curve. It's probably closer to 2,800 now. And this is just a sample of the forward curve again. Prices are up on both sides of this right now. Market trends generally. Key growth markets are currently powder plays. A lot of trading around that. Merging markets are still looking for significant volumes, and they're also looking at engineering a lot of product mixes through veg oils versus dairy oils, etc. And thank you very much and for your attention. I really appreciate it.